Hi, welcome to the Market Alert for Thursday, the 17th of September 2015. And today is D-Day. The day has arrived. Is Yellen going to increase interest rates or not? Whether she does or she doesn't, she's going to have a major problem. And that, in my opinion, and the same as this article in Zero Edge states, is that the biggest problem that she's got is going to be credibility and a lack of confidence in her ability to be the Fed chair, because she's vacillated so much on her decision to increase interest rates all of 2015. It started in January, it went to April, to June, and now we find ourselves in September, and we still don't know if she's going to or not going to. And it's a bit like having one of those mates that's always talking about a lot of things, but there's no action, and eventually you lose faith, you can't take their word. And there's more of a confidence issue here, in my opinion, than there is whether she actually does raise the rates or not. So if she doesn't, then nobody's really going to believe anything she has to say from this point forward. And if she does, she's going to be remembered for Yellen's deflation, in my opinion, because she's going to sink the US economy. It's never recovered. That's a certain fact. And that's going to be her legacy. So she's damned if she does and damned if she doesn't. So we'll find out at 7 p.m. Later this evening. And yesterday, talking of manipulation, let me just go back to this article for one second. Something I wanted to show you here. It says, if all you have is talk, and people tend to take you a lot less serious. That's a certain fact. There's no doubts about that. Moreover, the abject and grossly expensive failure of the Chinese central bank to quiet down its domestic stock market has raised questions about the omnipotence of all central banks. And this is true, as I've said before. The central banks will do whatever they can initially, but eventually they will be overwhelmed by the fear of the investors, who will withdraw their money anyway. And then there's nothing they can do. So they're wasting their money at the front end anyway. They might as well just let the free market decide on what should actually happen. Yesterday morning, after I finished recording the market alert, the Shanghai rose by 5%. We were expecting a quiet pre-market session, which we did once the Shanghai market closed. But I sat and watched a 5% rise. And I was talking on Skype to somebody at the time, and I said, okay, the People's Bank of China are at it again, and apparently they've printed 46 billion and chucked it into the market to create a 5% rally. Every time this market gets down to the 3,000 level, they enter the market. It's a psychological level, it's a major level, and they want to keep the market above this level if they can. So, but after a while, it doesn't actually create confidence. It actually shows that they're not in control. I bet there are days, and especially today, when she wished she'd stayed at Harvard and spent her summers at Martha's Vineyard. But anyway, enough of Yellen. We'll soon see what she's got to say later on today. So this is the Dow's reaction to 50 or just under 50 billion yuan going into the Chinese market yesterday morning. And then you see that the bubble didn't work because it came out of China as well, and the market drifted back. The afternoon session, well, it was just an absolute bore, and I sent out a note, as you know, to say that I got fed up of watching it. Paint drying had become more appealing, and then of course, as soon as I sent it out, the market decided to come to life, and it just sprang into life before the afternoon normal quiet session, which we see the market very quiet there. And then we had, which again, a pattern evolving. This is something that you will have noticed as well. I keep bringing to your attention for the last few days. Since Monday, the Dow's risen by 400 points, and most of it's been done in the evening because they want the market to finish on the highs each day, and that's precisely what we saw last night. I'd had enough by this time, turned off and left, and the market then moves up around 70 points and has done absolutely nothing all night, waiting for the Fed, and this is going to be probably the same for most of today as well. There isn't really anything that anybody can anticipate or do. It's just a case of sitting and waiting until Yellen makes a decision at 7 p.m. What's interesting is the daily chart, though. We are back above the highs of the sort of flash crash that we had. The high of the 28th of August has been taken out. This was done yesterday. It was done on paltry volume. The volume is getting less and less and less. This shows that either the PPT boys, the plummet protection team have been out again, just putting some liquidity into the markets late on the night, or the market makers are moving prices up, whichever way. But if we get a move to the upside today, then it's 17,000 is going to be the crucial area for this market. It's also the 50-bar average level as well. And news-wise, well, there's only one piece of news today, and that's 7 p.m. That's the only one you need to know about. If there's anything out before that, Philly Fed. But to be honest with you, I don't expect an awful lot. We'll probably get an hour, the first hour, a bit of movement around the markets and whatever, but then it's going to go very, very quiet as the market waits for Yellen's decision. Also, let's have a quick look at China. The market up 0.7, and if I just switch this to a monthly chart, you can see how important this 3,000 level is. Each time the market gets down or breaks this level, the Central Bank of China come out and print more money and throw it into the market. It's an absolute disgrace, as well as a waste of time. This is manipulation at its most blatant, to be honest with you. I mean, we know that the last 8 years have been manipulated by the Fed, but it's sort of, at least they printed the money, threw it into the market, and then the bankers sent the stock market higher, so it was predictable. But this is just blatant manipulation because they don't want to see the failure of their stock market when it actually was pumped up in the first place. When you look at the 5-year chart, it just exploded in 2014, and now it needs to come back down to the 2,000 level. So once it eventually breaks the 3,000, they'll get fed up of supporting it, and that's where it will head. In the implied volatility, big drop yesterday, 17.86%, and this is interesting as well because this now allows the options to be marked up. It allows for the market in the background to drop sharply if necessary as well, because these options are not filled with froth. There is some intrinsic value in them as well. And especially if you're buying the September puts, which is a bet to the downside, they will expire tomorrow, I think, actually. Yes, they will. So you could get a lot of bang for your buck, as they say in the US, if the market does have an adverse reaction to Yellen. So cheap options can yield massive percentages. So probably another reason why this has been pulled back as well. And what else have we got? We've already spoken about the liquidity in the Chinese market yesterday. And what else? Interesting chart for you, just to leave you with all of the former villains of the Fed. Greenspan, you can see he started printing money back in when he came into office under Reagan, and you see we've got the 2000 dot-com bubble there that burst under his stewardship. He then left office. Bernanke had the housing crisis, along with this crook here, Hank Paulson, who left Goldman Sachs with a $350 million tax-free bonus, and then joined the US government in how to solve the crisis. So yes, we print 8 trillion. 8 trillion goes into the stock market. Smug smile there as he exits stage left, and now Yellen is left there pondering what to do with the mess that was created by her former colleague. So she's going to be the scapegoat for all of the money printing and debt that we have seen before. So Mrs. Yellen, the world awaits your decision on whether to increase or to keep interest rates unchanged. And looking at this chart, I think what is going to follow shortly is going to be the roar of the bear, and also, as the term has been coined now, Yellen's deflation. So let's wait and see. 7 p.m. this evening, and of course this time tomorrow we will see the result factored into the market of whether she does or she doesn't. So that's it from me for today. I will see you in tomorrow's edition of the Market Alert. A pivotal day in history, in my opinion, especially if she does raise rates, because she's only ever going to be remembered now for causing the latest carnage in the markets, and it's something that I personally would not want to be remembered for. That's it. See you tomorrow.